Welcome back. Well, today Mangalam will focus on the second quarter's numbers, and the sector of the day will be FMCG. Mangalam, over to you.
Well, as far as the FMCG sector this time around is concerned, we're looking at some dark clouds before the festive season optimism kicks in. Why do I say that? Because, just to set the ecosystem in order, there's been a gradual rural pickup, but that's been offset by stagnant urban demand. So that's on the demand front. Competitive intensity has been very high, and this is on all fronts. Retail feeling the heat from quick commerce, jewelers feeling the heat from lab-grown diamonds, soap makers is seeing increased competition from each other, whereas paint companies are battling out the competition from the Birlas itself. Out-of-home consumption has been impacted by excess rains and flooding. Here too, competition in the beverage space, particularly from Reliance's Campa, has impacted some of the players. To add to the woes, we have raw material prices which have begun to firm up post-deflation, making margin expansion all the more difficult. And that's something that we've seen in the results that are out already. There have been weak internals from Tata Consumer. Nestle's volumes fell 1.5%, margins missed street expectations, and DMart called out specifically a quick commerce impact on its sales. And that's not just the numbers that have come by. Even from the Q2 updates that we have already, Dabur volumes and margins have been impacted by beverage inventory correction. Marico's domestic business posted mid-single-digit volume growth. Bangladesh has been resilient, so that was one of the better numbers that came by. But GCPL cited inflation and competitive intensity for India margins to be weak. For the jewellery companies, revenue growth has been led largely by higher gold prices, increased boost from the budget and store expansion. But they too are facing uncertainty from lab-grown, and there is concern that have people preponed their purchase ahead of wedding season in the second quarter itself, and will that happen in the third quarter as well? From a company-specific standpoint, analysts see a mid-single-digit sort of volume growth coming in for HUL, 2 to 3% cigarette volume growth expected for ITC, and a seasonal weakness expected in players like Asian Paints, Berger and Pidilite because of, again, excess monsoons and flooding. And from the recent industry trends and the recent results, let's look at some of the outperformers. Colgate, Honasa and Jyoti Labs are likely to be key outperformers in the staple space. There have been early signs of recovery in quick service restaurants, so this is a sector we'll be watching out for. And stocks of the dairy and edible oil sector may continue to see margin expansion due to favorable macros. But however, beyond all of these numbers, the most important thing to track will be the commentary on the festive season, because on that hinges many hopes of recovery in the near future.
Oh, absolutely, Mangalam. Thanks so much. And, our market master was echoing exactly this sentiment. I mean, people like Harsha, perhaps, who've gone slightly overweight on consumer, have gone so expecting that recovery to really come through. Will it, is the question. Abneesh Roy, Executive Director at Nuvama Instl Equities, is now joining in. Abneesh, hi. While the market was dealing with a lot of potential issues here and there, from geopolitics to, commodity prices to what's happening with bank margins, I don't think disappointment from consumer companies was really sort of penciled in to this extent. From Bajaj Auto to Nestle to what DMart said, this is, Tata Consumer's reaction today, not looking too good. Your initial thoughts?
Yeah, thanks. So yes, if you see our preview, which was released a few weeks back, the heading was that the quarter will not reflect the kind of re-rating stocks have taken. So we are seeing profit booking because the rural recovery is there, but urban slowdown is clearly there. Why is the urban slowdown? Clearly, food inflation is very high. That does impact urban consumer much more. That doesn't impact rural that much because freebies are happening in the rural. Plus, a lot of the foods is locally produced for the rural consumer. So he doesn't face that same issue. Second, of course, is Q2, the impact of the competition was there, the weather was there. Going ahead, our sense is Q3, Q4, the rural recovery will further sustain. But urban, we continue to remain cautious. Our sense is competition, quick commerce, and urban slowdown is something next 1 or 2 quarters will remain. So that's why we will be more positive on names which have more rural presence and which have propensity to gain market share. So till now, yes, you are absolutely right. Most of the results have been on the negative side. But we do see that Britannia, Colgate, even Pidilite, Bikaji will report a good set of numbers. So it is not that the entire sector will see the numbers which we have seen till now.
Okay, that's heartening. We need a ray of hope when it comes to the space, right? Because we only got negative news. But even on rural, I mean, I go back to Dabur's commentary, right? And I think Dabur was the first one, suddenly got the debates stirred up. And I remember we spoke as well. On rural, since that's where your optimism is, what is the recovery you're penciling in? And what about this whole quick commerce disruption, because of which inventory levels and, channel and distribution sort of situation is really moving around quite a bit?
Yeah, so good question. So in terms of Dabur and rural overall, what we are seeing is Campa Cola clearly big disruption in the beverage space. We have put out multiple notes and we got the investor pushback that no, the taste is not suiting the Indian customer versus a Pepsi and Coke. What we are saying is clearly 10 rupee pricing by Campa Cola is quite disruptive. And they have really overcome the supply chain issue of the glass bottles by coming out with the PET bottle. This has led to Pepsi and Coke cutting prices. This has led to distributor margins getting expanded. So beverage space, clearly we are cautious. We do expect India business of Varun Beverages or say Dabur Juice business or say Gluco Plus business or Tata Consumer. Those would continue to remain under pressure in the coming quarters also. Coming back to rural, yes, we will see good numbers. As I said, from Britannia, we see almost high single-digit to double-digit volume growth even in Q2 when the numbers come. Bikaji double-digit, HUL also 5%, not bad number. Colgate around 8%. So I will say in rural, we are seeing recovery, and Nielsen numbers are also corroborating that. If you see NREGS number, which is a proxy to understand how the rural jobs are, that is seeing a downtick for now the last 9 months. So that means the rural guy is getting better jobs. If you see private consumption, which has been disappointing for the last 2 years, we are seeing some improvement, 7% growth coming there also. MSP hikes, exports being liberalized in terms of agri exports, that will lead to more incomes. BJP has won the Haryana, so we are seeing a lot of freebies now being offered in Maharashtra, for example. My sense is next 4 years, because of coalition government and because of competitive politics, we will see rural being higher than urban consumption for most of the FMCG players and even for the apparel players. So we are positive on the rural. We are cautious on the urban demand for sure.
Okay, all right.
Coming to quick commerce.
Yes, go ahead.
Last question you had. Sorry, I didn't answer that.
FMCG, the FMCG disruption, DMart, Dabur, all of them talking about quick commerce.
Yes, you're absolutely right. DMart clearly pointed out towards competition from quick commerce, and now we are seeing Zepto, Zomato, Swiggy all raising funds almost every month or say planning IPO. So that remains a concern. So our sense is general trade will keep losing market share, and FMCG, if you see in some cities, now quick commerce, e-commerce and modern trade is bigger than general trade in some of the cities already. So that is something with general trade, Kirana outlets have to grapple with. I think FMCG players will be more than happy eventually to transition more towards quick commerce, e-commerce and modern trade. But for DMart, I think it's a question mark because they don't have quick commerce and they need to really address the market share loss issue which is happening and some urban slowdown which is also impacting DMart. So we are cautious on DMart. We'll prefer Trent and V-Mart in that space, in the retail space.
All right, let me squeeze in one on the paint space then. Abneesh, I recall that, you had turned positive, I think a few months ago or so, and because these stocks have underperformed. Now you have crude oil prices that have declined, which will help them out on the margin, and prices as well have moved up. What's your view on the paint space and what do you like most? Abneesh?
Yes, Q2 numbers, as we had highlighted, will be weak because of excess rains. Yeah, am I audible?
Go ahead, you're audible.
Hello? Yeah, am I audible?
Yes.
Sure, sorry. So Q2 results we had highlighted because of the excess rains, there will be some weakness in terms of the overall results. We expect 6-7% volume growth, but we expect EBITDA to decline because of the high base. Outlook is positive. As you rightly said, pricing is improving and crude oil is not a concern, titanium dioxide not a concern. Marriage demand should come back for the jewelry players, for the paint players, for the sector, wherever marriage kind of demand is there. So outlook is positive, but Q2 numbers will be weak for Asian, Berger, etc. because of the excess rains and high margins in the base. In terms of Birla Opus, yes, there is an improvement quarter on quarter. But if you see 70,000 crore industry, if they take say 300 crores or 400 crores on a quarterly basis, still it is not impacting in terms of the market share any meaningfully. So they can coexist with the legacy players like Asian and Berger. Our sense is Kansai and Akzo will face the issue of long term. Where do they see themselves in India? So Akzo has already highlighted that they are reconsidering their entire presence in India. My sense is Kansai also need to do that at some stage.
All right. Abneesh, we'll leave it there. Thank you very much for joining us. Great perspective on a variety of issues there. Appreciate your time here on CNBC TV18. Look at the